For the past 2.5 years, the auto sector, which has been going through a thunderous phase, has started seeing a ray of light. Looking at the quarterly results of auto companies, it seems once again that the worst phase of this sector has passed. Listed two-wheeler and car companies have shown decent profit growth in the first quarter of the current fiscal. For example, if we talk about the country's largest car company, Maruti, its profit has increased by more than 129% on an annual basis. In the two-wheeler segment, TVS has registered a profit growth of 506%. However, the results of Tata Motors have not been that good. Let's also take a look at the sales numbers of these listed auto companies in the last quarter. First of all, talking about the country's largest car company, Maruti. The net sales of Maruti during the period has increased by 50.5% to 25,286 crore rupees. Tata Motors sales grew by 8.3%. Similarly, the sales of Bajaj Auto have increased by 8.4%. If we look at the sales figures of vehicles in July, then there has been a strong increase in the sales of commercial vehicles and three-wheelers. The sales of commercial vehicles have increased by more than 27%, and the sales of three-wheelers has seen over 80% jump. But one thing that comes to mind is that what has changed? Are auto companies going into an inflation mode again? One reason for this has been the softening of commodity prices in the last quarter. This has given relief to the auto companies on the margin front. The pain of semiconductor shortage has also reduced a bit during this period. The best thing for auto companies has been that the demand for vehicles has remained strong. People are not holding back from buying a car despite waiting for a year. They have a passion for buying vehicles, and recently, when Mahindra launched Scorpio N, 1 lakh vehicles were booked within an hour. The launch of Maruti's Grand Vitara and Brezza has also been a similar hit. But this is not the case with two-wheeler companies. The reason is that most of the demand for motorcycles and scooters comes from rural areas and small towns. Rural India is going through a period of distress, and two-wheeler sales are not picking up because of this. For example, take the results of Bajaj Auto. Bajaj's domestic two-wheeler volume declined by 40% in the first quarter. Bajaj Auto's total sales volume also declined by 7% to 9,33,646 units from 10,06,014 units during this period. And the trend of low sales of two-wheelers continues in July as well. The sale is down by about 11%. So can it be concluded by looking at these results that all the pain points of the auto sector have vanished? Another question that comes to our mind is that how is the future going to be for this sector? The answers to these questions lie hidden in some factors, such as the problem of chip shortage still remains a problem for the entire sector. Now take Maruti itself. Due to the lack of chips, Maruti could not produce about 51,000 vehicles. At the end of the last quarter, orders for about 2.8 lakh vehicles were pending. Not only this, the low base has also been a big hand behind the good results of Maruti. And this is not the case of Maruti alone. Other auto companies are also facing more or less the similar situation. That is, the results of one quarter cannot be said to be a sign of rising sun for the entire sector. Now comes the next point and the most important one. What next? That is, how does the future of the auto sector look? Broadly, the situation is pointing towards a recovery. For example, auto companies have given strong sales figures in July. Companies are launching models thick and fast. On the other hand, the situation of chip shortage is also improving. And the major thing is that till now, the monsoon has been normal, and this is giving hope of good demand in the village and countryside. However, the fear of recession may reduce the demand in the export markets. Let's also talk about what is in it for investors. Will there be money in the auto sector stocks? So, the matter is that the brokers are also happy with the boom in the auto sector and are revising their ratings for these stocks. For example, Jefferies has given a buy rating for Maruti with a target of 10,250 rupees. The stockbrokers of Tata Motors, which became the choice of investors in recent times, have also remained the first choice. For this, Jefferies has given a target of 540 rupees. Overall, the auto sector has entered the recovery phase, and in the coming times, if inflation is controlled and the chip issue is reduced, then this sector can again ride back on the fast track.